Hello and welcome to the paid weekly recap for the week ending July 25th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Before we get started, normal disclosures. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trade advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you do have further questions about the disclosures, please go ahead and pause the video here so you can read them fully. Otherwise, we'll get into the market recap for the last week. First things first, we've got the 10-year yield and it's really going nowhere. Now, we have the Fed meeting on Wednesday, and that may finally get us to see a movement in the 10-year yield. But given that the market is expecting no change on Wednesday, and I assume that that's going to happen, given that there's like the CME's Fed Watch shows a 97-ish% chance of no change. As long as that happens, I'm not sure I see the 10-year yield making a big shift here. We've been range bound. The big range is 4.1 to 4.6. Recently, it's been between 4.3 and 4.5, pretty pinned to 4.4. Something changes in tariff negotiations, something changes in the Fed's speak, or something changes in non-farm payrolls on Friday, and maybe we finally get a move in the 10-year yield, but overall, very sideways market. Now, speaking of tariff deals, today we do have an update that the EU and the US have struck a tariff deal for 15%. Last week, we had Japan strike a similar deal. China and US are supposed to start talking again on Monday. Now, all of this has been leading towards tariffs working out with 15% level, and the market likes it. We have resolution, we have concrete numbers, and we don't have to keep talking about tariffs anymore. Now, China is the big one, but having the EU and Japan done, at least that's a starting point that shows that there are some negotiations happening and that there are some deals being reached. And as those deals get reached, the uncertainty behind whether tariffs are going to become a bigger problem in the future is a disappearing issue. Then the focus has to be back to more of the normal stuff. Is inflation going to get too high? Is the Fed going to move on rates? Is there going to be bad news on non-farm payrolls? And as long as none of that stuff really jars the market too much, it seems like upside is still the direction that we're going. And the market closed on highs on Friday. Similarly for tech, we closed on highs on Friday. So just generally speaking, tech has been the leader for the market from the long perspective, but small caps have been continuing to lag. Healthcare is a big part of small caps in addition to financials, and healthcare just can't seem to get off the floor. Financials still generally performing well, but not healthcare. And if that healthcare side of things starts to perform better or financials take a bigger leadership role, perhaps that's when small caps start to really shine. And then finally, the VIX, dropping as it should. We're getting some more unknowns out of the way, and the VIX needs to drop. The realized volatility of the S&P 500 is in the single digits. So pricing in expected movement and not getting it really, really tends to hurt for the long option player. But that said, it gives more leverage when we get the direction right, and that leads us back into some of the paid ideas. So on Monday, we closed out the remainder of the JP Morgan position. Now seeing how it all behaved through the rest of the week, it would have been nice to hold for the rest of the week. But at the end of the day, a 6-day hold, 1% profit in the stock, and a just under 6% profit in the options. So, I'll take it. Small wins are better than losses. Similarly, Microsoft closed out on Monday. Now, on Tuesday, we actually started a little bit of a dip here that started getting concerning. And I'll come back to that in a moment because we actually added back into Microsoft the following day. But taking the exit on Monday looked like a really good time to do so, as opposed to trying to wait into Tuesday or Wednesday with a trailing stop. And that position that was from the prior week ended up being an 8.3% profit for the second half of the trade. So a little bit less profit than the initial first half, but at the end of the day, still a profit. Now, the two new trades this week were Microsoft re-entering with the 515 call now instead of the 510 call, and we had the dip that then bounced back. So by Friday, we had gotten to a new all-time high. We did exit during the day for a nice profit of 19.5% prior to some of that dip near the close. So the stock's only up 0.6%, but 19.5% on the options, and I'll take that every day. If I have 20% profits on my trades, it's not as big of a return as I generally target, but if I have to get 20%, I'm certainly happy with that. And just generally speaking, we're looking for, 30, 40, 50% returns on average. But at the end of the day, I'll still take 20%. And we held the second half of the position for Monday, which hopefully gets another lift with this new EU-US tariff deal. And then finally, NVIDIA, another tech name that got hit on Tuesday. So we entered on the open. The hit came after the open. So pretty much the worst time to open on Tuesday or to open the position on Tuesday. But we did end up closing higher, actually made a new high before dipping a little bit right before the close. Very small profit on the first half of the trade, 4.7%, 20 cents per contract. 1.3% rally in the stock overall. Late entry on the day on Tuesday would have certainly performed better for us, but we'll take what we can get. And for the general conversation again on the live trading room, make sure you join us. We've got a lot of other ideas, and with this week being full of broad economic fundamental news, looking forward to talking through what we're seeing. We've got a lot of big earnings this week, Microsoft included, Apple, Amazon, a lot of big tech names. So be sure to join us. Morning bell from about 9:30 or 9:15 till 10:15, 10:30 Eastern, and then the closing bell from 3 to 4. And as always, you can reach out to us via email. I'm Keith at yellowtunnel.com and Vlad is Vlad at yellowtunnel.com. So looking forward to hearing from you and another great week for the paid system, hopefully. Thanks again, everybody.